and today we will discuss about diff and lag functions. Diff and lag functions, these are two important functions which we have it in SAS. For example, let me explain in Excel first, and we'll go back to the SAS programming. Let me make it very clear in Excel. So let's say you have some data, let's say 2000. Let me take the same data, whatever I have it here. So let's say year, and this is county. Now, if I ask, let's say this is county. So let's say you have house prices across every year. In 2001, let's say the price of the house. Let's say you wanted to buy a house in 2001, and in a county, let's say for example, county A. When in the US generally you'll have a lot of counties, right? In each country. So in 2001, the price of the house is 2 lakh, or you can say $200,000. Let's say $200,000. In 2002, the price of the house. Let's say you thought of buying in 2001 the house, and when it was in the price was $2,000, $200,000. Let's say you didn't buy for some reason in 2001, and now you wanted to see what is the current price of a house if I wanted to buy in 2002. Now there is an increase of uh, $20,000. Now in 2002 it was $220,000. Now in 2003, what is the price? If you want to buy a house in so and so county, what is the price? It's $250,000. So the house prices are keep on increasing from year to year. Now what I want the percentage increase in the price when compared to the previous year. I want to find out the percentage increase in the price. So what is the percentage increase in the price, or what is the value? If I ask you how much did it increase in 2002 when compared to the previous year 2001? So how you'll get that information? Deduct this to $20,000 from, I mean this value. You have to deduct this $200,000 from $100,000. So 220 minus 200. So you'll get 20,000. So I can say that there is an increase of $20,000 in 2002. In the similar fashion for other countries as well. I mean for other years as well. I'm sorry. So if I ask you what is the amount that it increased in 2003, so $250,000 minus $220,000. In the same way, in 2004, what is the price that it increased when compared to the previous year? So it's $280,000 minus $250,000, right? And later on, I would also like to find the percentage increase. How I'll get the percentage increase? You need to take the difference by you need to calculate on the cost price, right? So this is the percentage increase. So there is an increase of 10%. There is an increase of 10% when compared to the previous year. There is an increase of 10% when compared to the previous year. There is an increase of 13.6% when compared to the previous year. So there is an increase of 12% in the year 2004 when compared to the previous year. Okay. There is an increase of 10.7% in 2005 when compared to 2004. So I want to find the difference amount, as well as I want to find the percentage increase. Percentage increase. Okay. Okay. So this is one concept, or it can be sometimes what they do is, let's say you have information something like, let me take the same thing. So let's say you have county A and this is related to county B. I'm sorry. Let's say for example, okay, I'll take this information. County year and price. Okay, not a problem. So year, this is county and price. Okay. Now let's say you have the information. The previous example. In the previous example, I took only one county information, but let's say you have different counties. I mean, different. When you say county, it's a different region. Let's say different regions. In one region, so you have information here. You have information related to, uh, let's say, county 1001. Let's say in Hyderabad. These are the prices in Hyderabad across each year, and these are the prices. These are the prices in, let's say, Pune across every year, and these are the prices in, let's say, in Mumbai. Okay. Now I want to, whatever you have done, whatever analysis or whatever you have calculated here, the same thing I have to do it across each county. I wanted to do it. I wanted to check in Hyderabad what is the percentage increase in the house price from year over year. In the same way, in Pune location, what is the percentage increase in house when compared to the previous year? In the same way, for other things. For example, what you have to do is you have to take the difference, this minus this, and here again this should be blank because you should not take the difference of this to 220 and 310. Why? Because that's different county information and this is a different county information. Okay, this is how I need to calculate. So here across each county, I would like to calculate the difference as well as percentage increase. Okay, so this can be one scenario where you need to calculate, or it can be in real time. You'll come across something like, let's say you have Jan 2015, 2015 Jan information, 2016 Feb information, sorry, 2015. Let me say 12 values. So let's say this is year, this is a month. Now this is, let's say, some same price. Now if I ask you what is the percentage increase in 2016 Jan month when compared to last year the same month. I mean, I wanted to find the difference between the current year Jan and the previous year Jan in the same way across all months. And also you need to find the percentage increase or decrease. This divided by this. So I would like to calculate this information. Means month over month increase when compared to the this is nothing but year over year increase. Year over increase. I mean, when in 2016 Jan month, so the sale was 13. I mean, let's say 1336 or 1336 $1,336. And in the same year, let's say this is profit or sales, it can be anything. Let's say it was 1325, means $1,325. So now if I ask you what is the percentage increase in the month of Jan in 2016 when compared to the previous year 2015 Jan, okay, you have to calculate all those things, right? And also it can be year over year changes. Calculations can be year over year changes, so we call it as generally YOY calculations, or month on month changes, MOM calculations. So you come across with such scenarios in real time. So what is the percentage change in increase, month on month increases or year over year increases? It can be anything. So they use these keywords only: YOY, MOM. MOM is month over month changes, and YOY is year over year changes. So when compared to the previous year, what is the current status? Is there any improvement in our profits, or is there any increase or decrease in our profits? Or month over month change? What is the month over month change? It can be simple, Jan to December. Let's say I have given you Jan to December data, and I have asked you month over month changes. It can be in this fashion, or it can be when in the same year last year, in the same month last year, I mean Jan month last year, Jan month as well. What is the difference? I mean, you have to compare and you need to find the difference. So these are the various scenarios we come across in real time. So for all these scenarios, basically this will help in time series. Actually, in time series, if you want to find the trends, this will help you. So in order to come up with, in order to achieve all these, whatever we did it in Excel, we have two functions in SAS. One is diff, the other one is lag. So using diff function and lag function, we can do all these things. Using diff and lag, we can do all these things. So the main purpose of diff and lag is to read the previous record values or previous observation values in the current record. For example, uh, if you look at this value, what is that value? How did I get this 11? How did I get this 11? Let's say, for example, let me take this. Let me come back one by one. So how did I get this 20,000? How did I get the 20,000? So if I have here the previous record value or previous observation value here, I can find the difference, right? I can find the difference. So what I'm trying to do here is I'm trying to read the previous record values in the current observation. So in this record, I wanted to read the previous record value, and in this record, I wanted to read the previous record value. So reading the previous observation value in the current observation. If in the interview they'll ask you, how do you read a previous observation value in the current observation? So you have to say diff or lag function. Using diff and lag, you can do that. Okay, how do you read the previous observation value in the current observation? So this is what we will do it initially, and later on we will take the difference of these two, whatever difference you get, and later on we'll divide by this difference amount divided by this value, this $200,000, then you'll get this percentage. So in order to do this, there is a function called lag. So lag of price. You need to say lag of price. If you say lag of price, what it does is lag. So it will try to read, lag function is basically used to read the previous record values in the current observation. So by default it will only go back to the previous record, just immediate previous record, and it will read it. If you say lag of price, let's say you said lag 2 of price. If you say lag 2 of price, if you say lag 2 of price, let's say you wanted to read here what happened in lag 1. Simply it moved, it went to immediate record, it went to immediate preceding record, and it picked that value. If you say lag 2 of value, it has to move two values prior to this 2,20,000. Do we have two records prior to, or two values prior to this $220,000? We don't have anything, so we will not get any value here. Here also you will not get any values because we don't have any previous values prior to this $200,000. But coming to this $250,000, so it will not take the immediate value, it will take the second immediate value. What is that? It's 200,000. That value will come here. In the same way for 280,000, this value will come 220,000. For 3,10,000, it will take $250,000. This is how it calculates. If you say lag 2, if you say lag 3, say lag 3 of price, so it has to go back to the three values prior to the current observation, and it needs to read the data. So you'll get the values in this fashion. This is how it will get it. So where this will help you, this lag 2, lag 3, lag 4 and all. Let's say you want, okay, I'll tell you. Let's say for example, in this case, let's take this case. See, how did I get this 11? How did I get this 11? Which lag function I have to use? Lag of 12 of price. Why? Because I have to start reading, I have to read when it is 2016 Jan, I need to go prior 12 records and I need to fetch this value. So I have to use lag 12 of price. So here I'll get this I'll get the values in this fashion. So I'll get the value. How I got this 1325? How I got this 1325? I went prior to this 1336, we have 12 values. I have to pick the 12th value. Because last year Jan month, what is the value I need to pick it? Last year Jan month, what is the value I need to pick it, and I need to take the difference. So this is the functionality of lag 2, lag 3. What is the functionality of lag 2, lag 3, lag 4, lag 5 is it will lag, it will drag the values basically, or you can say, in simple words, to read the previous observation values. Previous observation. When I say previous observation, it can be immediate previous observation value or depending on the requirement. So basically, to read the values prior to the current value in the observation, in the current observation, or to read the previous observation values in the current observation. If anyone asks you what do you mean by lag, if you want to read, generally in the interviews they'll ask you in this way only. How do you read previous observation values in the current observation? So this is the question. How do you read previous observation values in the current observation? So what we are trying to do here in the current observation, we are trying to read the previous observation values. Okay, so this is how it helps. Now if anyone asks you year over year changes, or if anyone asks you the difference of in the Jan month in the last year, what is the profit and what is the current month in Jan month, what is the current profit, and I have to take the difference. So you have to go back to the 12 values prior to this and you need to pick the values. Okay. Now to answer your question, Ram, you have asked when do we use lag 2, lag 3, lag 4, depending on the requirement. Let's say you have 3 counties B, C, and you have Jan month information, and here you have, let's say you have here you have some Feb month information, and here you have March month information in 2001. Again in 2002 you have some information of these 3 counties. Here Jan, here also, here Feb, here March. Now what I need to get in order to compare the across each county I have to calculate. So in this case, let's say you have only 3 values. Let's say you wanted to compare only Jan, Feb, March. So what I have to do, if I want the Jan value of this, let's say this is related to 2001 and this is related to 2002. Now here I want this value. So what I have to do, I have to use lag 3 function, because I have to go back to the 3 values prior to this Jan and need to pick that value. So depending on the need, how many values you have to go prior to this, and you need to read the record. Based on that need you will be using. Okay. So here in this case it's 12. It can be in this case it is 3. It depends. So depending on the need, we'll use the lag function. Okay. And in the same way, diff function. What do you mean by diff? This is a lag function. Basically, if you apply lag function on any variable, what it does is it will read the previous records based on the number you put it after the lag. If it is lag 1, just it will take the immediate record. If it is lag 2, it will go prior to it will go to the not it will not pick the immediate record. Prior to that immediate record, whatever you have, it will take it. Okay. Now diff. What do you mean by diff? Diff function, see how you got this difference amount 2000. You are deducting this 2002, I mean from $200,000 from 2000, right? So diff function also will work in the same way like lag. If I say diff 1, let me tell you here, let me write it here. If I say diff, by default it's 1 only, diff 1 of price. Let's say if I say diff 1 of price. Okay, if I say diff 1 of price, what it does is it will take the difference of the current record and the previous record. So these calculations you are manually doing this minus this, right? No need of doing that. If you say diff 1 of price, it will take the difference of the current record and it will take the difference of current record minus previous record. And here also it will take the difference of current record minus previous record. So in the same way it will apply in that way. Now let's say if you say diff 2 of price, or in this case let me talk about here. So how I got this difference 11 and all how I got, we have to apply. You can also alternatively use, instead of lag function, instead of lagging the values, you can use diff 12 of price. Then what it does is it will take the difference of the current record and it will move back to this 1336. It will check the 12th record, means it will move ahead of 12th record and it will take the 12th record and it will take the current observation value and the 12th record. Prior to this, it will move ahead and it will pick the 12th record and will take the difference. Diff of 12 is nothing but current record minus this one. In the same way to calculate for all the records. So let's see it practically in SAS. So the example 1. So compute house price increases from year to year for one county. Suppose you have a SAS data set which contains the median sale prices of houses sold from 2001 to 2005 for a county, and this is the example data set 1. This is the example. Now how do you count all these things? How do you do calculations? All these calculations, whatever we have seen in Excel. Simple, it's very simple. So first we'll apply lag function. I'll apply lag function on price. So if I apply lag function on price, I'll get these values. What are those values? I'll get these values. Okay, if I apply lag function, I'll get these values. So later on, I can take the difference of the current value minus lag price value. So I took the difference of price minus lag price. Okay. Now I'm storing the information, the price minus lag price, whatever I'm getting, whatever the result I get, I'm storing in a new variable called diff price. Diff price. Now how do you calculate the percentage increase? Diff price by lag price into 100. Then you'll get the percentage increase. So you got the percentage increase. So it calculated, we have applied lag function, we calculated price minus lag price, or alternatively you can use, instead of this deducting price minus lag price, what you can do is you can also calculate, you can also apply diff function. Let's say for example, so alternatively instead of this, what you can do is you can apply diff function. Let's say diff underscore price equals to, I can also write alternatively diff of price. Let's see both the calculations. Let's see are there any calculations, are there any difference between these two statements? Let's see that. Let me give it diff price underscore 1, and this is diff price. Let's see the calculation. So both will give the same result. Okay, either you can apply diff function or you can deduct the price. When you can use the expression price minus lag price, you can deduct the lag price from price, then you'll get this information. It's up to you, you can do any calculation, anything is fine. Now let's say you wanted to do the same thing for each county. There are multiple counties. Let's say 1001 is a county, 1002 is a county, 1003 is a county. Now you wanted to the same calculations, you wanted to do it for across each county. How will you do it? How will you do it across each county? If you apply the similar logic, let's say you apply the similar logic, what will happen? If you apply the similar logic, let's say for example, this is not there. Okay, let's say this is not there. Okay. Now what I'm trying to do is, where is my data? My data is in example 2. So I'm reading my data from that example 2, right? And I'm creating a new data set example 2 underscore right. So it's very important here. One point you have to make it clear. See, we wanted to do this calculation for each group. For each group or for each county, we wanted to do this calculation. If you remember, if you want to do any calculations across each group, what is the prerequisite? You have to use by statement in data set. If you want to do any calculation across each group, you have to use by statement, right, in the data set. At the same time, if you use by statement in the data set, we need to make sure the input data set is in sorted order, right? The input data set is in sorted order. Top sort data equals to data set name is example 2 by county and year. Run. So you have to make sure your data set is in sorted order because you wanted to apply the logic across each group. If you want to apply across each group, let's say your data, this triple county number 1001, let's say you have that information here, will it be possible to apply this logic? If you apply lag function, what will happen? It will take for this record, what will happen? It will take the difference of current record and the previous record, and these two are not related to same counties. So what you have to do, you have to first sort the data and make sure all the county related information or all the related information, means all the related information, in the sense in this case county 1001 related information should be at one place, county 1002 information should be at one place, county 1003 information should be at one place. Otherwise it's not possible for us to apply this logic, right? So you have to sort your input data, right? Anyway, this data is in sorted order. Here in this case it's in sorted order. But if it is not in sorted order, you have to make sure the data is in sorted order. And here I have to sort based on county and year. Why based on county and year? Let's say you have this information here. Will it work? Will your concept work? No, because in the second record you have 2001 year information. In the first record you have 2002 information. You cannot take the difference of these two. It's wrong again. So you have to make sure you are sorting the input data set whatever you are using for your calculation. So I have to sort here based on country, county and year. I have to sort based on county and year, right? Okay, now let's come back to your program. Now see here, example 2, right? And I'm reading the data from example 2 by county and year. I'm using lag function and diff function, and I'm calculating the percentage increase. When I say percentage increase, it will be difference price by lag price into 100. Let me calculate this. Now observe the result carefully. Is it correct output? Is it correct output? No, right? If you look at the county number 1002, how can you get this difference? You should not get any information here because we don't have any previous records for 10. I mean, we don't have any information prior to 2001 for county 1002. In the same way, for county 1003, you don't have any information. These two records, see that this output is correct. When it is correct, it is correct, but we don't want this information because this information is, these two record values are wrong. So what we have to do? This record is nothing but it's a first record in this group, right? For 1003 county, this is the first record. In the same way, 1002 county, this is the first record. So for each group, the first record value should be null. For each group, the first record value should be null. So what technique we can use it? We have first dot last dot variable concept, right? You can use that first dot last dot variable concept. If it is the first dot county, what do you mean by first dot county? It will pick the first record from each county, and if it is the first record, what I want to do is I want to make this lag price as dot and diff price also dot. I wanted to make it as missing. Okay, if it is if the first values, if it is the first record for each county, I wanted to make it as dot. Let's go here. Now let me execute this program. I hope you remember first dot last dot variable concept. If you remember that, then this is you can easily understand this. So now I am trying to make it as dots. If it is the first record from each county, then I am replacing with missing values because I should not get any information here. Any questions on this? Anyone? Any questions? Okay, cool. this example, set example 2, we don't have this information with it right now. Okay. Now, you come across with such scenarios in real time. If anyone asks you to find monthly percentage change. When you say monthly percentage change, not getting first dot, last dot. Okay. So it's a separate concept, Ram. It will take a lot of time because it's a separate topic which we explained already. We'll connect offline because it takes a lot of time. When you say first dot, last dot, what does it mean is uh, it's the first record. Let's say, I mean, to make it simple, let me, if I say first dot, so from each county, it is the first record. First record from each county. This is the first record in this county. This is the first record for this county. For example, okay, that is the first record in this county, and in this county, this is the first record, and in this county, this is the first record. Okay. So now what I'm trying to say is, if first dot county, if it is first dot, I mean, if it is first record, then please replace that diff underscore. Please replace with missing values for lag price and diff price. That's what I'm trying to say. So if it is last, so if I say last dot, then it will apply for last dot. Okay. But in our example, our requirement is to replace the missing values only if it is the first record. If I say, let's say, if I say here, if first dot county equals to 0 or last dot county, then do. Then what will happen is, for last records of each county as well, you'll get the, I mean, you'll get missing values. Here you have, for this county, both first and last are missing. And also for county 1002, both first and last are missing. For county 1003, both first and last are missing. So there is a concept called first dot last dot variable. You can connect with me offline. I think you are not attended that session, so we can go through that topic. Okay, now computing period to period change. So the compute percentage change of the previous period divided the difference of the series of lagged values. Okay, forget about all those things. Here the concept is, you wanted to find the monthly percentage change. For example, let's say you have data, like for example, let's say here I'll take some monthly sales data. Okay, input month and sale amount. Let's say you have Jan, let's say $1,000, and in Feb the sale was some 1200, and in March sale is some 1100, April some 1200, May 1000. I'll take only 5 values for the time being. Now if I ask you the month over month changes, so what you will do? So diff of, what you will write here, sales amount divided by lag of sales amount into 100. Now you have the sales, let's say you have the sales numbers from Jan to May. Okay. Okay, so I'm reading the data from monthly sales. So I'm applying diff function. So what diff function will do? Diff function will take the difference of the current record and the previous record. So you'll get 200 here. 200 divided by lag of sales amount. What lag function will do? it will read the previous record in the current observation. Okay, so diff of sales amount by lag of sales amount into 100. Now if I execute on that, let's go to monthly changes. You'll have the percentage change. So if you want to find out the, if you want to find the monthly changes, you have to use different lag functions. In the same way, if you want to compute year over year changes, if you want to compute year over year changes, you need to use diff 12 by lag 12. You have to use diff 12 by lag 12. Okay. So when you say year over year changes, this is the meaning. So current year Jan month minus last year Jan month. Okay. So you have to use diff 12 by lag 12. So this will give you percentage change from 1 year ago. Let's say you wanted to compare, you have the data in this fashion, but you are interested only in December sales information when compared to December sales. Let's say you wanted to compare December to December sales. You'll do the same thing, but you can filter it using if statement or where statement, whatever you can use that. You can use the if statement. You can use the if statement, and you can only read one particular month information by using month function. Month of date equals to 12. So it will read only December month information. Let's say you want from the above information, if someone asks you what is the percentage change in the price or sales from December of the previous year to December of current year, then in such cases you can also filter the data. Once you get in this, you'll get all the 12 months information. If you want to filter from that, you can use this statement and you can particularly read one particular month information. This is all about diff and lag. So the purpose of diff and lag is to read the previous observation values. If in the interview they'll ask you this question: how do you read previous observation values in the current observation? Previous observation values in the current observation. So you have to say using different lag functions. You can read the previous observations value in the current observation, and you can come up with all these calculations. And these calculations are very important. How it is important? Let's say, for example, later on, what we do is, let's say you have one more year. Let's say you have one more year. Let's say 2017 here. 2017, and here you have so if you plot the trends for these percentages, if you plot the trends, so nothing but difference of this minus this value. Now let's take this data. Let's say you wanted to uh, So what value you have here for the time being? You have all Jan, month and 7 months. So I want your sales information, right? Your percentage. What all value? Sorry. Let me do one thing. So don't explain Jan, right? You can plot it something like, let's say you want 801. So if you look at here, I mean, generally I picked wrong. I mean, some random data. That's the reason it's not showing up correctly. So I mean, in some months it's a negative value. I mean, there is a decrease. In some months it's a positive. So you can do some analysis if you can find out that what is the percentage increase in across each year. You can do some analysis on this, right? So in which month there was highest increase? Let's say, for example, you wanted to find. So let me pick one value here. Let me change one value here, then you can see clearly see that. Let's say this is let me give this some 50 in 2016 what is this value, which data point it is? Second Feb. So there was the highest sale or the highest whatever. See, once you have those calculations and when you plot them, you can able to find out if there is any spike or dip in the trend. Then you can come up with some solution. You can say that okay, so and so thing has happened in so and so month, something like that. Okay, let's say for example you have uh, the same information. You can take the same information. The same 1000, 1200. If you look at this trend, see, till 2017 May, the trend is fine. But suddenly there is a spike in 2017-06. What is the reason? Let's say, uh, let's say it's a month or year or whatever, and this is employee count. Employee count in, let's take this as an example of HP. Okay. And suddenly, when you draw the trend for the employee count, let's say you have observed in this case. Okay, you have observed a case. There was some spike in 2017-06. What could be the reason? Let's say HP has acquired a new company called some other company. Let's say ABC and Co. ABC and Co. Okay. Because of that, already in this company there are, let's say for example, 3,000 employees. So now these guys will be under HP, right? So there is a spike in the trend. So how will you come to know that? So once you get this result, once you draw the trends for all the companies or all the clients in your organization, what you do is you have to find the root cause for this. You need to find out what is making this spike, what is contributing for this spike. It can be anything. So you have to identify that HP has acquired a new company. So how will you come to know that? Either the HP company, two things. You can get it from Google. You have to research and you have to find the relationship between HP and ABC and company, because you might see in the patterns in your data, you might see HP is paying to ABC and company employees. Immediately you need to go to Google, you need to check whether there exists any relationship or not. Yes, if it exists, then in your data going forward, let's say till now the pattern which you are using to track the employee count of HP is HP some INC. Now in future you'll use this pattern as well as ABC and company pattern. So if you want to take the count, you will be using these two patterns and you'll take the count and draw the trend. Then this will be eliminated. I mean, this will be eliminated in the sense it won't eliminate. It won't eliminate this. This portion will retain as it is because it's a genuine spike. It's a genuine spike. But let's say you are not capturing this information, then you will not know the health of the company. Let's say the company acquired by HP, ABC and company, which this company is into losses. Already it is into losses, and the credit rating for this company is in negative, or let's say it's very risky customer. Now, if you don't find this information, what will happen? You will end up in losses, because let's say a company acquired which is into losses, the financial health of this company HP will also go down. Obviously the risk rating of this company will go down, right? So you have to continuously monitor the health of each and every client of your organization. You have to continuously monitor each and every client health in your organization. It's a monthly, every month you need to monitor what's happening with that company, whether there is any increase in the employee count or decrease in the employee count. If there is a, I mean, if there is a 10% deviation in the employee count, that is fine. But if there is, let's say here you have, let's say 1300, this is fine. If there is a little spike, but this is fine. 10% deviation is fine. Let's say this is 1600. Okay, generally on an average it will be some 1200 or something, but suddenly it increased to 1600. So you need to find what is the root cause. Or let's say here it went to 200. So there is a dip. So why there is a dip? I mean, did we do any layoffs in this month, or really it's a genuine dip? So you have to find the root cause, or it can be issue with the data. Let's say till now HPINC the category is pay. Suddenly they have changed to OTH. See, generally what they do in real time is, let's say on every month you see billions of records, billions of transactional data. So each transaction, they from each transaction they identify who are the parties involved in these transactions. Let's say you are paying money to or HP is paying money to, for example, let's say, or you can take an individual. So Kalyan is paying some amount, or he bought something from Paytm. Let's say he bought something for Paytm from Paytm. So what we'll do is, who are the parties involved in this transaction? We will have two columns for that. And the third column would be what is the amount, and the fifth column would be what is the nature of transaction, for what purpose he is paying this amount. Is it for utility bills, is it for luxury goods, is it for investment, or is it for insurance? So what is the purpose of that transaction? We'll create a column and we try to put some, we try to create, we try to categorize, and also to which and also through which channel, through which channel this amount is being paid. I mean, when you say channel, whether they have used debit card or credit card, or if they have used wallet for paying the amount. So we'll create one more column. So from the single transaction, we derive a lot of columns like parties involved, the amount, the nature of transaction, what is the channel, through which channel they pay, and we do all this analysis. Why we do all this analysis? So for better targeting or for revenue enhancement. Let's say, for example, we came to know that every time when Kalyan is using his credit card, the majority of his spending is on utility bills. Let's say we found, how we'll come to know that? Based on your transaction information, the raw description. So we'll have raw descriptions like say Kalyan, let's say some electricity. We'll not have complete information. And you'll say you'll have some codings, some you'll have some date, let's say 12 Jan 2016. You'll have some amount information, you'll have some Paytm, like Payt, that's it. Then you'll have some other things, I mean, you'll have these raw transaction. You'll have one text, one raw string. From this string, we try to create all the columns. Who are the parties involved? The originator and beneficiary, and what is the nature of this transaction? What is the purpose of the transaction? What is the transaction date, transaction amount, and with which channel it got paid? So we create various derived columns from this information. So for that, we have to write a lot of logics, right? And identify. So let's say, if I give you 1 billion transactions, and if I ask you what is the total amount, that is received by Walmart. So you need to pick out of those billion transactions, you need to pick all the transactions related to Walmart. And every time Walmart, they won't use Walmart keyword in this fashion. They don't use this. Sometimes they use WM. Sometimes they use WM digital. Sometimes they use Walmart.com, or sometimes they'll say Walmart Supercenter. So the pattern will not be same, because when you do transaction, when you send money to anyone, you'll write the description in standard format or what? You'll not write, right? In whichever fashion you want, you'll write it. Okay. So we have to identify, we have to make sure how you identify all the transactions related to Walmart. So you have to write a lot of logics for that. And logics in the sense, you can use index function, you can use like operator, and you can write the logics. So you can search for a keyword related to Walmart using index function, and you write a lot of when statements. In the case you write when index of so and so, index of so and so, then you try to, if index of, you'll search for all these keywords and you try to flag it as Walmart. Okay. So and that's one area of where which you can put it in your CV as well. This is called data engineering work. Data engineering. So people who wants to enter into data science space, so it's not always you do the modeling work. You make your hands dirty by working in the data engineering space as well. When you're saying data engineering, you work on this data, you try to come up with a lot of variables which will help for the modeling team to take the decisions or to strategize, use in their modeling equation or predictive modeling equation. So all these variables will help them. Unless you categorize your data into various. See, from this raw transaction, you will not come to know anything. You cannot do any analysis unless you have some derived columns from this raw transaction, right? Uh, that's one body of work where you do in majority of all the banks they do content category. There is a concept called content categorization. So that unless they categorize their data, they'll not be able to take any decisions, or they'll not be knowing anything about their customers. So categorization of transactions is very important. Through which channel through which channel the transaction was made, what is the purpose of the transaction, what is the transaction date, transaction amount, parties involved, right? So you'll come to know all those things. And also you'll come to know, let's say Kalyan and is paying to Paytm. Both the clients might be customers of, let's say you're working for Wells Fargo. Both the clients are customers of Wells Fargo, or let's say Kalyan is sending money to Paytm. So it's an outbound transaction. It's an outbound transaction for Wells Fargo. Means money is flowing out of bank and it is going to Paytm. Now let's see. Let's say every month you are seeing that at least 2 million transactions are going to Paytm. And who is not our customer? Who is not our customer? Let's say you observed 2 million customers, 2 million transactions are going to Paytm. I mean 2 million payments are being made to Paytm, and Paytm is not our customer, let's say. Now we will approach Paytm and we will say that we are observing, this is the thing which we are observing. We'll talk to them. So since we are seeing that majority of our customers are paying money to your account, so why don't you start a relationship with our bank? So, if I ask you, I want to get the list of all the prospects information. I wanted to know the list of all the. I asked you to at least give me some prospects information in the retail customer space. I want all the list of top retail customers, so that I wanted to target them. So now what you'll do, you'll take all the retail customers like Paytm, Walmart, JCPenney, Best Buy, Cheers. So you'll take all those guys. I mean, if at all the data is flowing into our records, then only in our systems, then only we'll be able to know. If the data is not flowing into our system, we'll not be able to know, right? So if you do this categorization, it will help you to identify your prospects and to identify your existing customers. And mainly, see, it's an assumption in this industry that always we earn more from the new customers instead of existing customers, because existing customers anyway, it's a standardized, it's just, I mean, we know that customer, and anyway that is standardized. So how can you increase your revenue? If you identify your new customers, if you identify prospects, then you can earn more from them, right? So you need to know how to do this categorization work, and how this categorization work will help to the organizations. How can it help to increase the revenue in the organization and also mitigate the risk in the organization? Okay, let's say Paytm is a client of Wells Fargo, and every month we see on an average 2 million records, or 2 million wire transactions are happening to Paytm. But one fine month, one particular month, we saw suddenly it dropped to 200. It dropped to 200 transactions. Why it happened from 2 million to 200? What happened to Paytm? Are we losing this customer, or what happened? What happened? Maybe he might have started a relationship with some other bank like Bank of America. Let's say he has opened an account with Bank of America and he don't want to continue a relationship with Wells Fargo anymore. So what could be the reason? How you will come to know that there is a drop in the transaction count for this Paytm on monthly basis? So every month you need to monitor the health of each and every client. So you need to identify for any given client, who are the suppliers of that company, who are the buyers of that company, who are the employees of that company, what is the transaction count, what is the dollar amount. So you need to come up with all your insights, and you need to continuously monitor the health of each and every client. If you monitor the client, then only you'll be able to take better decisions, or you can be proactive on the risk mitigation front. You can be proactive on the risk mitigation front, as well as you will come to know the opportunities, how to increase the revenue by interacting with that client. So you can identify your prospects, you can identify the business opportunities. So this is one body of work. I'm trying to explain one body of work. So in these scenarios, in such scenarios, you'll see all these. I mean, you'll draw the trends for each. I mean, you have to automate. Every time manually, you will not draw these trends and all. So you automate. Let's say I've given you 1,000 customer details, 1,000 clients information, and you have to generate all these graphs automatically. And also, we don't want to look all the graphs. Let's say the trend is fine, absolutely fine. Why you want to go and check the trend once again? So I need to pick the clients from these 1,000 clients. I need to pick the clients where the deviation in the last 24 months, if the deviation is more than 10% in any of the months, I want to pick only those issues and check what happened in those months. I don't want to check. I don't want to see all the months issues. I wanted to see only in the months where there is a huge spike or a huge drop or there is a deviation in the trend when compared to the previous month. So content categorization is nothing but categorizing your transactions. Your transactions. Categorization of your transactions is nothing but it is one of the, I mean, let's say in your system every month 2 billion records are flowing into your system. Okay, from 2 billion, so you need to categorize your transaction. How many of them are made through credit card? How many of them are made through debit card and bill? And you'll have in US like Samsung Pay, Apple Pay concepts, right? Through some mobile. I mean, we have in India as well, Paytm wallet. Money. I mean, you have a lot of wallets, right? In the same way, through which channel that is being paid, and also what is the purpose of the transaction. So whether that transaction is related to utility bills or it is related to insurance or whether it is reported to health or whether it is related to various categories. You have to identify the categories as well. So if you can identify the categories, so for which category or for which purpose they are making the transaction, you can better target those customers, right? And also you have to identify the clients belong to which industry, which sector. Further, you can drill down. You can drill down and you can identify, let's say Paytm. Paytm is into which industry and which sector, and what is the risk rating of that company, and what is the balances or what is the amount that that company is owing to Wells Fargo or Bank of America. If that particular client is a, I mean, if that particular customer is a client already, then we'll know all those information, as well as who is the client manager dealing with that particular client. You have to categorize your information so that it will help all the client managers or whoever is using the dashboards. It will help them to better target the customers. And also, let's say majority of your transactions are happening through, let's say Ram is paying all his transactions through credit card. Even though you have a debit card, you are not using your debit card. So we wanted to encourage you to use debit card. So what kind of promotional offers or what kind of initiations I have to take to make you to use the debit card? I have to plan. So I'll come to know that if you categorize your data. There is no categorization work in any bank. Nothing they can do. They cannot develop any models. They cannot take any decisions. They cannot do anything if there is no categorization work in banks. Okay. Okay. I mean, I think we're almost on top of the hour. It's 8:30. Uh, so, I mean, why I have explained all these things is this we draw a lot of trends based on the values. Let's say, for example, you can say, let me put it some example here. Let me take the last example. Okay, this is the trend. Now you have, let's say every year, November and December time frame, there could be a spike. And again here, So every year, November and December, you're seeing some spike. It doesn't mean that there is an issue. Generally, if this client is related to a retail store, let's say Walmart, generally November, December time frame, obviously the employee counts will increase because there will be a lot of sale happening during this year, right? So they'll hire some contract employees and they try to pay. So you find some spike in November and December time frame. So you need to identify if there is any deviations. You need to automatically identify, is it related to a seasonal issue. Seasonal issue. When I say seasonal, every year in the same month there is a spike. So you need to programmatically identify the seasonal issues. Okay, so in all such scenarios we use this different lag functions. Different lag functions. So any questions on what we discussed so far?